Hi everybody, this is Ospreyeye from MyChartCoach.com, and we're going to take a look at some of the stocks that were in play from yesterday. We posted two videos yesterday, and then I'm going to go back and look at the charts on the stocks that we covered, and do some follow-up on most of the plays. GBTC had already been covered in a video earlier tonight. You know, as you saw, that closed up over 40% and had excellent follow-through. Okay, in the chat each day, I try to towards the end of the trading day, I like to pick out a couple of plays that have the most bullish setups for the end of the day. Always looking for plays for the swing traders. And yesterday, MBRX and PLX each were very strong on the 15-minute chart, and so they are both big candidates for swing trades, and they each followed through. And so I want to show you what they look like on the 15-minute chart as well. And then I'm going to go through all these stocks really quick this time. I'm not going to do a ton of TA. I'm just going to do it fast. Okay, so here's MBRX, bullish on RSI in the 50 to 70 bull zone. Yesterday, the reason why we were bullish on the stock was the close above the middle Bollinger Band. We were looking for another close above that level today to break the previous trend. If you watched the video before, most of the closes above the middle Bollinger Band were followed by red candles and pullbacks. If you look each time, and so today there was a bullish change in trend, and this is exactly what we were looking for. And not only was there a bullish change in trend, but it also broke above our next key resistance level, which was the 50-day simple moving average at 0.925. That was a very bullish close. Okay, this is our bull signal. One of the setups that we really like is a close above the 50-day simple moving average. If that level holds and turns into support, we could be seeing a run all the way up here to the 100-day simple moving average at 130. There will be some resistance. There's going to be some resistance here at the dollar level. Always, dollar is always a big level to break. If you look up here at this high close, that's lining up with the 100-day simple moving average currently. This is another key level. This is $1.17. So basically, we've got a breakout going on here above a key resistance level. It's looking like there's going to be more upside potential. As you can see here, there's this downward channel, and then now it's breaking to the upside, and so it's also pushing through the upper Bollinger Band, and so it needs to pull ahead of both levels, turn into support. It needs to bust above $1.02, and then you could see a run up here to the $1.17 range, possibly a run up to the 100-day simple moving average. If the uptrend continues, if it does stall out here tomorrow and you get a pullback, you want to see the middle Bollinger Band hold. As long as that holds, a new uptrend should begin. What you want to also keep an eye out for is more volume. Notice that there's still low volume on the play, so it's going unnoticed right now. Like we said yesterday, we had the bullish crossover on we had the PSAR bull flip. That's what we really liked. We had the MACD lines both heating up. We had the bullish crossover on 80X, and then we had Fasto and RSI had both heated up yesterday as well. So these were all the bullish signals that were telling us that MBRX had more upside. And the other thing that we really liked yesterday, there was a break yesterday. This is the 15-minute chart above all the moving averages. Okay, and so it started riding EMA4 support higher above the 100, the 50, the 200, and the 300. And so the strong close above all the moving averages and riding EMA4 support higher was our signal that this had very good upside potential when you also take into consideration the daily chart. And so today it broke out higher. This is exactly what we were looking for. It did consolidate here. What we need to see now is a break above high close resistance, which is going to be the third candle of the day, and this is basically at just above 94 here, and if it could break out above 94, then we could see a run up to Dollarland. So yeah, there was good volume today behind the move. So just for future reference, when a stock turns the 300-day simple moving average into support on the 15-minute chart, that signals more upside potential. If you were following BTCS today, you would know that that was the big breakout higher when it was able to turn that 300 into support on the 15-minute chart. Now PLX is another stock that had a good setup yesterday. What we liked was the close here above EMA's 4, 8, and 13. As you can see here, it had been in this very nasty downtrend, riding EMA 4 resistance lower for quite a bit of time. This was the last close above that level, and so what we were looking for was a close above the middle Bollinger Band today. That did happen. And we were looking also for a break above the 100-day simple moving average at 929. That did not happen. It broke above that level temporarily, but it failed to close. And so now it's wedged between these two key levels, the 100 SMA resistance and the middle Bollinger Band, which is also the 20 SMA support. And so going forward, if it can break above the 100, then we're going to be talking about a run up here to the 50-day simple moving average at 104. If it fails to hold the middle Bollinger Band, then it could drop back below and continue this downtrend. As long as this middle Bollinger Band holds, there should be upside potential. There was a PSAR bull flip. We've got the bull cross on both time frames. You know, the chart is really heating up. The black candle is a pause and decision candle. So you know, this is another play that needs the volume. You know, it doesn't have the awareness right now. You know, you want to see some volume spikes to push through resistance. RSI here is getting ready to bust through 50 if it can. If it gets above 50, that's going to be a very bullish signal. It's at 49 now, and Fasto, we were looking for a break above 50, and that did happen today. So the chart is really heating up, and also, like we said yesterday, we want to see the green line cross the red line to the upside. So they're pinched right now, and so if plus DI crosses minus DI to the upside in the daily chart, that's going to be a very, very bullish signal. One of the reasons why we liked PLX yesterday, as you can see, this is just like that MBRX chart. Notice how the candles are above all the moving averages. Notice how they closed here. This is yesterday, 15-minute chart. The close above the 300-day simple moving average, above the middle Bollinger Band. That was signaling more upside potential, and then you were rewarded by holding overnight with this big gap up open. You know, there was some profit taking off of that level, but support did hold, and there was a close above the middle Bollinger Band, and it's holding the 50-day simple or 50 simple moving average. As long as this green line here and this dotted purple line hold, then there will be upside potential. If you see a drop below the middle Bollinger Band and the 50 SMA breaks, then you could see a drop all the way down here into this big support level between 82 and 84. So this could break out higher. What we want to see is a break above high close. We're always looking for high close resistance to break, and that's currently at 94. That's going to be the big resistance level to break. You know, around 89 here. You know, if you see a drop below 89, that's going to be a big downside risk signal. You know, that was support here today. So keep an eye. You know, this is a nice uptrend going. You know, there was some loading into the close. So you know, and what you want to see here, there's a bullish crossover in the 8, 13, and 5. That's signaling a possible new push higher. You want to see this 12, 20, and 6, 9 bullish cross, the MACD line bullish cross over the signal line, and that would be a signal that it's possibly ready to push to that next level. Let's take a look here at MARA. This is another stock that was in a very strong downtrend, and then it had a dead cat bounce yesterday, and so we posted TA that we were looking for a close above EMA4, which is the pink line. You know, the last close above that level was over here in the third day of May, it looks like, and so today that happened. There was a close above EMA4, so that was really good. The share price ran above EMA13 and it pulled back. It formed this long upper wick, and so that does show profit taking. You know, there was this big volume bar. Basically, tomorrow there's two levels. There's EMA8 at 29. It needs to break above that level to head higher. If EMA4 at 26 support breaks, that would signal a major downside risk, and you would not want to be holding. Okay, so there was a PSAR bull flip today. You know, MACD is pinched and started a bullish crossover on the 8, 13, and 5. So the chart is trying to heat up here. You know, just keep in mind this is a very nasty downtrend, and downtrends are really hard to break. So far this is the dead cat bounce short cover rally. Many times those only last a couple of days. We'll see if it can hang in there. This is the 15-minute chart. I'll show you what happened here. You know, yesterday it had closed above the 50-day simple moving average, or the 50 simple moving average, the green line here, and then it closed right at the middle Bollinger Band. So that was a bullish close. You know, it was hanging in there, signaling that there was more upside potential. Notice that there was light volume into the end of the day, and then today there was this big volume spike and push above the 100 and 200 SMAs. But when it hit the 300, it stalled out and pulled back. And so that was this was the profit taking zone for the overnight overnight swing trade. When you get the climax spike and the pullback with the long upper wick with this giant volume bar, this is called the climax spike. That's the signal to lock in gains. And then it pulled back and it consolidated sideways here. So basically going forward, it's got a break above this 200. Notice how the 200 turned into resistance. If it fails to do that, you've got the 50 and the 100 is support below. If 26 breaks, that's going to signal downside risk. And if 29 breaks, that's going to signal upside potential. Notice how those two numbers are the same numbers that are key on the daily chart. Okay, let's look at SYN. Okay, this stock had a really nice move yesterday, and it had closed above the upper Bollinger Band. And the one thing that we were looking out for is possibly the candles working back into the bands. That happens many times after a strong move. It's today a red candle form, but not a bearish reversal pattern. As long as this EMA4 support holds, this is a very strong uptrend. Bulls want to see this 50-day simple moving average at 0.569 hold. As long as that holds, this is a super strong chart. The key level to break now is going to be our next target, which is the 100-day simple moving average at 0.695. It still looks like it can push up to that level. Don't leave the trade when you've got a nice uptrend going. 59, this 57 to 59 zone should be the load zone on a pullback as long as it holds. As long as candles are forming above the middle Bollinger Band, the stock is in an uptrend. So today there was a lighter volume pullback than the big volume spike yesterday. That's what you always want to see. So there wasn't a big sell-off today. So keep an eye on SYN for possible push higher. The big level on this 15-minute chart is the 50 SMA. Notice how it closed right at that level. If that breaks, there could be a big drop down to 57. If it breaks above the middle Bollinger Band at about 635, then that's going to be your signal that it's ready to break out higher. Once again, go for the high close to break above resistance, which is this candle right here at 1130. If it can bust above that around 66, that's going to be a signal it's ready to break out to the next level. Okay, let's look at SMRT. Okay, this is the chart that we posted yesterday, and it broke above EMA4 yesterday, had that nice bullish close above the bottom of the gap, and then today it stalled out at EMA8. That is the green line here, currently at 156. It needs to break that level to head higher. If it can bust above this EMA8, then our next target is the bottom of the gap and EMA13 at 170. Okay, keep in mind that a gap fill many times is a climax and is a signal to lock in gains. Fail to hold on to EMA4 support currently at 148 would signal downside risk. It's always super risky to hold, especially a penny stock when there's a close below EMA4 on the daily chart. Okay, let's look at HMNY. If you watched the video from yesterday, we discussed about how it was a bull trap and how basically when we see a black candle form after a big gap up open, our strategy is to head to the sidelines. And if you took our strategy, you would have saved yourself a 23% decline, because this is a signal that the bears were actually in control yesterday, even though the stock was up in the day. That's the reason why Japanese candlesticks are so awesome, is because they give you the psychology behind the trade. And so there's a lot that you can learn just by looking at the candles. And so here we've got this big pullback all the way down to the support level that we were talking about. Notice how the candles work their way back into the bands, and that's what I was saying yesterday was going to be the big risk. There was a huge pullback down to this 3 zone, and we were talking about 3 yesterday as the possible reload zone, because that was where the 100-day simple moving average and EMA4 was at. Okay, it hit that level, it actually dropped down to EMA8 and bounced, and so we're still looking at 3 as a possible level to bounce off. If it can get back above the 100, it could get running again. If it fails to break this 100, then you could be looking at a possible pullback down here to the 50-day simple moving average. That will be the key level to hold at 265. The candles are forming above the middle Bollinger Band. There was this huge move yesterday, and it got ahead of itself and it got shorted, and then they attacked it hard today and it pulled back into the bands. Many times you'll see a bounce after that happens. Keep in mind there's still an unfilled gap on the chart. Okay, let's look at CMLS. This is another stock that had the big move, and then it pulled back, and this is kind of what I'm talking about with HMNY HMNY, because notice how it's got the big move and then the pullback, even though this is a white candle. Notice how the candle today was a small black candle. It found support off of EMA 8. That's the same level that HMNY bounced off of today. And so you could possibly see a similar type of pattern tomorrow for HMNY. You want to see it form a small candle, if not a bounce candle, a white candle. But you know, basically for CMLS here, it's looking like the uptrend is still intact. You know, the candles are still above EMA 8 here at 45. That is the key level to hold. If it breaks, you could see a drop all the way down here to the 34, 36 range. You know, as long as the middle Bollinger Band, once again, in 50-day simple moving average is holding, this is a really good uptrend. So look for a possible push back higher. We're still looking for a break above the 100-day simple moving average at 64. Okay, and then GLYC. This is a stock that had a really nice move yesterday. It had closed above resistance, and then today, you know, it came out that it had an offering for a much lower price. I believe the offering was 7 million shares at $11, which is down here. It stalled out today with a what looks like a doji, even though it's a little bit wide for doji, but this is the same type of indecision candle. So you could see the candles work back into the bands. EMA 4 is going to be the key support level to hold. We'll just have to see how this plays out with the offering. You know, this is still a very strong uptrend. You know, the candles did close above the upper Bollinger Band, so there's a good chance that they will work back into the bands. You know, if it pulls back down to this 11 level, you know, it's EMA 8 at 1045 is going to be the big support level if EMA 4 breaks. Okay, and keep in mind there is this big gap on the chart down here. At this unfilled gap between these two candles. It's actually from this lower wick here. Okay, so thank you very much for viewing this video. If you like to learn more about charts and technical analysis, please check us out at mychartcoach.com and our YouTube channel at mychartcoach.com. Thank you.